Good day, AVZ Traders. Welcome to broadcast number 30. I'm really excited that we are making progress with our broadcasts, our coaching videos. These are coaching videos, example after example after example of how our strategies unfold in real life environments, and of course, updates to strategies, a real storehouse of resources that is readily available to you. And of course, you gotta keep on sending me the questions because I'm your on-demand personal coach, Q&A coach. Make use of me. I produce content, I answer questions. Now, GBPUSD, an absolutely fantastic setup, strategy number 1 and strategy number 2. Interestingly enough, they're both set up before the open of the London markets. Now, this is open of London markets. Of course, GBP country-specific index open here. You should always expect something exciting or dramatic to unfold. Now, I think as a guideline, and I've mentioned this before and I'll mention it again, if you are not trading a country-specific index in the Asian session, okay, JPN Japan 225, Hang Seng 50, Aussie 200. If you're not trading those and looking out for the open of their specific indexes, anything else, it is always wise and prudent to wait for as many of the Asian exchanges to open so that the decision makers are in the market and you are with them and you are flowing with them and the volumes are in the market. There's no point waiting for MT4 to roll over and then execute a trade. I mean, guys, just hang around, wait for things to happen. So by the time this sets up, this is almost the after lunch Hang Seng, Singapore rather, Singapore, Malaysia, Hong Kong. So all the exchanges are open and you can see as the market opened high of yesterday, low of yesterday, upper AVZ, sell zone, lower AVZ, buy zone, middle AVZ, AVZ of indecision. You guys know how to sing the story by now. And the bulls tried to say, hang on a second, we can accelerate this all the way up into the heavens. And of course, the bears said, no, this asset is as highly valued as it can be. Bears tried to sell off, but nothing strong by the bears. Bears, bulls, bears, bulls, bears. So there's nothing for you to do here. And again here, revaluation, bears trying to assert themselves by stopping the bulls from accelerating up. Then eventually, they managed to put in a decent enough trend candle, which they did here, but there was no follow-through. And the follow-through came fantastic, guys, for the bears. Problem was the tail below, because that reduces the possibility, right? Probabilities. If bears, you are that strong, why do you allow a tail to come in at the bottom? Why do you allow the bulls to buy into the close? But still, you can take that after having assessed that. And you know what I think of currencies? I'm looking for 25 pips minimum. You can work within 20 to 25 pips. 20 minimum allows spreads and all of that stuff to kind of get you to 25. So you can take that low probability, but of course you put in the right stop because you take no probability. Now look at the high of today, right next to the high of yesterday, 25 pips, put your stop above there, and you are saying, okay, I'm taking the trade here. I'm expecting that the bears will get at least to 1 times 1, which is absolutely fantastic. If you don't like this, guys, what did we say in the course and what am I going to be saying on Saturday? If you don't like any candle that sets up for you to say jump in, wait for follow through. So if you don't like that, wait for that. That's an even better candle. Bears following through, closing on their low. You can still take that. And now because you've taken that, you've got all of this selling by the bears and these 2 revaluations as a technical level. Let's see if it qualifies within our minimum. 20 pips, yeah, good enough. You can put it there, or you can put it at the technical level. That's 25. That's even better. So you can do that. You can jump in there and bang there. You can put it there. Okay, if you want, you can put it there. There's nothing wrong with that, right? So either there or there. So let's just, I don't want to put in the middle because then I'm going to start putting things in the middle. Okay, so you jump in there and you're hoping that the bears are strong enough to smash through the middle AVZ of indecision. And as soon as you start to get into that, disappointing, but you know what you're expecting as a higher probability event, guys, is a test of the average price. And that is what we are looking for. That's what we're expecting. But to get, and not but, to get this huge bear candle. Okay, from the test right here, the bulls trying to test the average price and commitment with the base, and the base said, not a chance. This asset we've already told you is far too highly valued, so we're going to continue to decelerate it down. That's good enough for a test. Pretty big, fantastic. Going to the open of London Exchange. If you want to sell that, you can do that, but the rules still remain the same, right? We don't just plunk it there because it's a lower high. We're going to look for our minimums. 20, that's 16, not good enough. 21, not good enough. Well, I mean, it's good enough, but let's look at the big bear trend candle, right? Which is what you could do. You could put it there, which is 25. Now, let me explain a little bit about that. So we have this breakout here, okay? And there is a high of the breakout. That's a big breakout. Midpoint is here. So you can always put your stop above that if you want. So if you take in that trade, midpoint there, that's a technical area above that bear candle, that's 25 pips. You can take that. Fantastic. Problem, of course, is a tail. It reduces the probabilities, but you say, I'm going to take it, put my stop up here. I know I'm going into London session, so anything can happen. Guys, you have to make decisions. If you see it set up and you see the tail and you know you're going into London and you are not happy with it, do nothing. But if I've seen it set up, I'm gonna be waiting, man. If I see like the bears opening on their high at the London session and it's gonna accelerate fast, if I can see it, I'm gonna jump in. Might end up getting filled in a little bit there. Doesn't matter, but my stop there. Even if I get filled in later, doesn't matter. I'm just gonna put my stop there, and then I am going to wait. First candle, beautiful. We are into the lower AVZ. There's nothing for us to do here. Bears and the tail at the bottom. So before I jump into bears, the tail at the bottom. So anyway, if you've taken any of these trades and you had said you take profit and measured move, okay, this is, well, okay. I'm going to just do this so that we don't confuse it. If you'd taken any of these trades, you would have made one-to-one easily by the open. No problem. No problem at all. Boom, bang, done, banked money in the bank. If you use this to find your stop and you put your stop here and you got in here, there is a measured move. Again, by the first candle, guys, bang, money in the bank. You could have just said, okay, I'm going to put my stop here. I'm going to put my take profit at one-to-one. So I'm going to get in here. There is my stop just above here. One-to-one, bang, I am in the trade. Nah, man, just here. Oh, too many measured moves. Okay, let me delete these guys. Even I'm getting myself all confused. Delete that, Dr. George, delete that. Okay, we use this to get our 50%. So let's delete that. We don't need that. Okay. The reason why that is there, you know that if the bears did that, you are expecting the bears to get at least one-to-one on that bear breakout, right? Which they got by the first candle. But you have used that to give you a 50% for your stop. I'm putting back in. Okay, so your entry is there and your stop is there at that 50% level. One-to-one is here. So if you take that, you don't get to one-to-one by the first candle, right? But you know the rules. You've taken the trade. You've put your stop there. As soon as you are in the trade, you remove after risk. There's after risk. There's a nice technical level. So the first candle is closed. Got a tail. You got a small loss. You got a choice to make, right? Either you leave it in, and you should leave it in because it's the first candle. They're disappointed by the bears. Nothing for you to do. If you're not happy with it, now I'm disappointed, etc., then you're gonna have to bring your stop to here and get stopped out pretty quickly. Get stopped out here or stopped out there. But you got there's nothing, it's minimal. So leave it. Let's see what's gonna happen. The bears, as weak as they are, they put a bear candle in. And on the first candle, they want to get to a measured move. Then they just kind of go sideways, go sideways, go sideways, go sideways. Every time the bulls come in, the bears say, no, we're not accepting higher prices. revaluation, revaluation. You're still holding there, chewing your nails. Then eventually you get rewarded. You get your 1 times risk reward. If you set your take profit at 1 times risk reward, bang, profit, money in the bank. You are happy. Everyone is happy. Well, you are happy at least. Okay, but there's nothing else for you to do here. There is no 1 times risk reward here. So you just gotta wait and maybe say, let me wait and see if the bears are gonna get here. So we've hit 1 times risk reward. You move your stop. Oh my goodness. Okay. That's your stop, guys. You now move your stop. Your stop comes here. You get that. Your stop comes here. You get that. Your stop. You gotta keep trailing your stop, right? And you do get to 1 times risk reward of there, and quite a big return for you if you had taken that trade. And eventually 1 times risk reward, you're going to get stopped up somewhere there. But I absolutely love this because it's set up during the Asian session. You had to make a decision to take it here. If you didn't make a decision to take it here, there's nothing for you to do. Just going to watch it and say, oh, if only I had. Guys, take the trade, especially going to the open. If it fails, what's the worst that can happen? You lose your initial risk, or maybe it get in, it fails, you lose only half the risk. Fantastic. Name is Dr. George. Take care, guys. Video broadcast number 30, coaching video number 30. I will see you in the course on Saturday, 4 a.m. Johannesburg time, you guys, not yours. Yours in Singapore, Malaysia is 10 a.m. this Saturday, the 11th of October. Take care. We'll see you there. Bye-bye.